Friday, July 10th. Gold whipsaws into the weekend as Iran strikes expand to Kuwait and Bahrain, while hawkish Fed minutes cap the rally. This is the AS Gold Daily Outlook. The snapshot. Gold trades near 41 to 27 after a volatile Thursday. The dollar eased to 100.98, giving gold some breathing room, while the 10-year yield sits at 4.58%, a 4-week high. WTI crude holds 74.56 as the Hormuz risk premium rebuilds. September hike odds surged to 63% after the hawkish Fed minutes. CPI nowcast at 3.96%. Your executive summary. Gold heads into Friday between 4100 and 4127, whipsawing inside a 4040 to 4130 band as two massive forces collide. The war. Iran's ceasefire collapsed. After Tehran struck 3 Hormuz tankers, the U.S. hit around 170 targets in 2 rounds. Iran retaliated with missile and drone attacks on U.S. bases in Kuwait and Bahrain. The Fed. June FOMC minutes were hawkish. Easing bias dropped. 63% September hike odds priced. 10-year at 4.58%. Friday has no top-tier data. Headlines and weekend gap risk rule. What changed? Iran war enters day 2 of U.S. strikes with around 170 targets hit. Iran hits Kuwait and Bahrain bases. Direct retaliation. FOMC minutes. Easing bias dropped. A few members argued to hike. September hike odds at 63%. 10-year yield at 4.58%. 30-year above 5%. Caps gold. Gold whipsaws. A $25 drop on minutes reversed by a 1% rally on war headlines. PBOC added 14.93 tons in June, biggest since October 2023, 20th straight month. Geopolitical risk. The 2026 Iran war has decisively re-escalated. The June 17th Islamabad memorandum is dead. After Iran struck 3 Hormuz tankers between July 6th and 7th, the U.S. hit around 170 targets across 2 rounds, around 80 on July 7th. Around 90 more overnight into July 9th. Iran then retaliated directly with missile and drone attacks on U.S. facilities in Kuwait and Bahrain, its first direct reprisals. President Trump at the NATO summit declared the Mao over. Weekend gap risk means shorts carry the tail into Friday's close. The federal Fed funds rate at 3.50 to 3.75% on hold since June 17th. FOMC minutes. Hawkish. Easing bias dropped. June. Plot. 9 of 19C a 2026 hike. Warship stained. 10-year yield at 4.58%. For week high. 30-year above 5%. September hike odds at 63% in Fed funds futures. DXY at 100.98. Eased, which gave gold some rebound room. The hawkish yield surge is the mechanical cap on gold. Watch the 10-year versus 4.6%. Inflation watch. Headline CPI at 4.2% year-on-year for May, highest since April 2023. Core CPI at roughly 2.9% year-on-year. June CPI nowcast at 3.96% year-on-year per the Cleveland Fed, a slight cooling. WTI at $74.56. Hormuz war premium rebuilding. The Fed cited oil disruption as an inflation pressure. June CPI is due Tuesday, July 14th. This week's decisive event. Asymmetric impact. The calendar. Wednesday, July 8th. FOMC minutes hawkish. Gold down $25. 10-year at 4.58%. Thursday, July 9th. U.S. strikes around 90 more targets in round 2. Iran hits Kuwait and Bahrain bases. Friday, July 10th. No top-tier data. Headline driven with weekend gap risk and CPI positioning. Tuesday, July 14th. June CPI. Nowcast at 3.96%, the decisive event. Friday, July 17th. Michigan sentiment preliminary, moved from June 10th, previously 49.5. Weekend gap risk favors longs into the close. CPI Tuesday is the week's real verdict. Trend analysis. Short-term consolidating in a 40-40 to 41-30 range, headline whipped. Higher timeframe bearish. price below the 50-day moving average at 4362.63, the bear trend intact. Critical zone at 4072 to 4042 being tested right now. The trend flip line is 42.271. A sustained breach turns the trend up. Overhead caps at 4127 session high and the 4138 to 4150 cluster above. Structure zone, bull biased while the 4042 shelf holds. Momentum check. The 2-day pattern is balanced, down $25 on minutes, up 1% on war headlines and a weaker dollar. Volatility elevated at $70 plus intraday swings, headline driven. The 50-day moving average overhead at 4362.63. The correction is not reversed below it. The structural bid, box 20-month buying streak cushions the 4042 shelf. Genuinely neutral momentum. Range trade zone edges until 4203 or 4042 breaks. Resistance levels. R1 at 4127, the July 9th session high, first hurdle. R2 at 4150, the analyst cluster from 4138 to 4150. R3 at 4203, the trend flip level, a sustained breach turns the trend bullish. R4 at 4255, swing resistance and a reaction high. R5 at 4363, the 50-day moving average, the medium-term structural cap. Support levels. S1 at 4072, the top of the retracement zone, key pivot. S2 at 4042, the zone floor, critical shelf. S3 at 4000, the psychological and structural line. S4 at 3942, the swing bottom, major shelf. S5 at 3886, the long-term main bottom, last defense. The trading ranges. July 10th daily range, 4040 to 4150 with headline spikes exceeding the band. Near-term band, 4042 to 4203, support zone to trend flip. Week of July 6th to 12th, approximately 4040 to 4130 realized, with tails to 3942 and 4203. The bull path, hold 4072, break 4127 and 4150, then target 4203. The bear path, lose 4042, then 4000, then 3942. Scenario A bullish, 35% probability. Trigger, day 3 of strikes, U.S. casualties, or new tanker attacks. Path, break 4150, then the trend flip at 4203, a regime change. Weekend gap risk pushes shorts to cover into Friday's close. Strategy, buy dips above 4072. Add on a break of 4127 or 4150. Scenario B, primary case. 40% probability, consolidation. Trigger, no U.S. data, war bid versus hawkish yields offset. Path, ranging between 4040 and 4150 on headlines plus yield drift. Tone, pre-CPI position squaring dominates the U.S. afternoon. Strategy, fade the edges. By 4072 to 4042, fade 4138 to 4150. Scenario C, bearish. 25% probability. Trigger, the 10-year pushes above 4.6% or Trump's hedge leads to surprise talks. Path, loss of 4042, then 4000, then 3942. The 50-day moving average at 4363 keeps the structural bear trend intact. Strategy, sell a failed retest below 4042 toward 4000. Structural support, China and central banks. PBOC buying streak, 20 months, the longest since 2015. China gold reserves at roughly 2346 tons, end of June 2026. June 2026 additions, 14.93 tons, the biggest since October 2023. 2026 accumulation just over 40 tons year-to-date, buying the dip. Global central bank demand around 1,000 tons per year since 2022, double the prior decade. The PBOC adding 14.93 tons in June is deliberate dip buying into the correction. The 4042 shelf has official sector support. The bottom line, near-term bias, neutral, war bid versus hawkish yield wall, Two forces offset. Range tightens ahead of CPI. The pivot zone is 4072 to 4042. Above is neutral. Below fades to 4000, then 3942. The bull path. Hold 4072. Break 4127 and 4150, then 4203. The bear path. Lose 4042, then 4000, then 3942, then 3886. Swing factors. Iran war headlines. June CPI on Tuesday, July 14th, and weekend gap risk. This is your AS gold resistance map for July 10th. The full ladder from 4127 up to 4363. Know your levels and trade the range. Thanks for watching. Like, subscribe, and turn on alerts. AS Gold, XAUUSD Daily Outlook.